Hi, everyone. Rob Lukey with Shop Prop Realty. I wanted to talk about the dot com versus the AI boom, why this time it might not crash the same way as people, a lot of people are comparing it. For those of you that don't know, I had a financial firm before this. I traded all throughout that time, all the way up until my company was bought out by Lightspeed in 2007. So I traded stocks, futures, and so forth during that time. I feel like I'm pretty familiar with what was going on during that time. And when you look at the price and the decoupling that has occurred, certainly in the last couple of years, and what I mean by decoupling, the decoupling from the S&P 500, this happens to be a Dow Jones and a NASDAQ chart, but the S&P 500 in the NASDAQ versus real estate returns. And we've had that decoupling occur. If you look at the chart that I have in front of me right now, what you'll see this is from the 90s all the way up until the dot bomb that occurred in the 2001 time frame, where we had that huge drop and the internet's just implode. The reason for that is because of valuation, certainly, but I'll get to why I think there's going to be a difference, in that this move down, although it might occur, it's going to be less than what you saw during the dot bomb. So let's talk about what happened to real estate prices during this time. They were decoupled. There was a muted response. Both the S&P, the Dow Jones, the Nasdaq were well outperforming real estate prices during that time. Similarly to what you're seeing happening now, I think that we're in this time frame now. I think that we're in this move is not done yet, in my opinion. I think that what we're going to see is we're going to see real estate prices like what you saw happen at the end of the dot com move. You had real estate prices start to catch up with the move in the S&P. They don't stay decoupled forever. So I think you're going to see that. This is going to be this move, this next move that we see. We're going to see real estate, the markets, the S&P, Nasdaq markets hit higher. The real estate will start to catch up, and then I do believe we're going to see some type of pullback. I think the pullback is going to be less than what you saw in the dot bomb area, and the reason being is because the valuations aren't nearly as steep as they were. The majority of the companies that have led to this big move, remember, are profitable companies. Nvidia profitable, Google profitable, Microsoft profitable. Of course, there's the open AI and so forth that are new companies, but they're doing billions of dollars a year. The majority of the companies that were in the dot com era were companies that were still not profitable, and they made up the majority of the market. In this situation, I believe that because of that, it holds a floor to the market. And so, although we might see this same type of move over the next year or two, where we see real estate jump, markets hit high, I think that you could see this 20% off. And then I think that we're actually going to move into the next stage of the market. I did want to point out too, remember, interest rates were in that time frame, were in the same range that they're in now, and even higher, six to as high as 8% actually in the 90s, all the way up until the dot bomb, where we had interest rates start to drop. This is after the dot bomb era, what we saw happen all the way up until the Great Recession in the 2007 timeframe, where we had real estate prices in the S&P, in the Nasdaq market, basically operate exactly the same. They were lock and step, basically giving the same type of returns. And then obviously we had the Great Recession, where we had obviously CDOs and so forth that crushed the market. That we could end that way, but that's a 10-year cycle. I think we go through that cycle. We'll have to look at that in the future to see how high these valuations get. Could we have something down the road after that first move, where we have the next move, where we have real estate prices and also the markets, the S&P and NASDAQ set highs, and then we have the 20%, and then we have some type of longer term trend up, both in real estate and in equity markets, and then some type of significant drop like we saw in the 2007 timeframe. It's possible, we'll have to look at it at that time on how steep the valuations get and what happens as far as leverage. But right now, that's my take on what I think is going to at least involve how the market's going to evolve over the next period of time. Hope everybody has a great rest of the year. I'll talk to everyone soon. Shopprop.com. We have the largest rebates and the lowest selling fees in the industry. I hope you guys take a look at our site. And obviously, our North Star is commission free home buying and selling for everyone. Take care.